So I was scrolling on Twitter the other day for the best stock on the market, Sezzle. If you don't know, it's a buy now pay later company that operates with competition such as Klarna and Affirm. You might know Max Levchin, the CEO of Affirm, as being part of the PayPal mafia. Anyway, it was then that I realized that the CEO of Sezzle had an account on Twitter, and I was shocked what I saw when I clicked into his account. I probably found this account maybe 6 months ago with less than 1,000 followers on it, and today the reach is still very, very small. And since other people didn't know about it, it gave me an idea. I could possibly profit from not other people having all the information that I had. This one account could be the source of unending profit. Okay, so of all the videos on YouTube that are not financial advice, this is the most not financial advice, purely just an interesting theory. No, not gambling, speculation. So today I'm going to be showing the exact evidence that I have to support this theory, and then you can decide whether you think this theory is valid or not. And if it does make sense, then you might have an ability to predict where August 6th earnings are going to be able to go. And I didn't actually clickbait. I did end up buying the company at $60 per share quite a while back, and it was trading at around almost $200 a share just a few days ago. It has dropped back down, but that's the nature of a volatile company. Okay, but this is when I started asking questions. Why did the CEO of a multi-billion-dollar company have such a narrow reach? Because surely the company is undervalued, right? And that's when I realized there is a way to make money from this information. The CEO's posts on this platform reveal confidence that he has in the earnings of the company. And because these posts have such a small reach, there's a possible chance that nobody else knows about these, or that they just don't even care. But it's more about the content of the posts than anything. Because yes, the company is undervalued. A 17 price to earnings ratio for a company that is growing this fast is certainly undervalued. Peter Lynch's rule, Peter Lynch being one of the greatest investors of all time, says that the company's growth rate should roughly match the price to earnings. And if the growth rate is higher than the price to earnings ratio of the company for the long term, it's likely that you can make money. And don't worry, after doing the math, I have determined that 32 is bigger than 17. After scrolling all the way down, we see the first thing Charlie ever posted was a repost of a dolphin. But more importantly, his third post was actually about the company. But if we scroll up more, what we actually find is Charlie stopped posting for a while. In 2023, he stopped posting for months. No, years. Only just to start up again recently. The account was dead because he hadn't been posting on it. And after the great crash that his company went through last summer, Charlie started posting again. From all of these ideas, my theory finally arose with one last realization. Charlie had been part of an interview purely for us individuals who were investing in the company. Yeah, there were a few institutions there, but Charlie was here for the 50 or so investors on Twitter to tell us about the company. And this is why he started posting again. He realized that there were people who actually wanted to hear more from him online. And this is where I built my theory. What if Charlie posting on X suggests he believes his company is going to do well, and thus earnings will be good, and thus the market will react well, and thus investors will make money, and thus his post will be well received? I have a feeling using the word thus 4 times means my theory is not very strong, but I do have some ideas to back it up. We just need to gather evidence if we want to make any sort of bet. All right, first let's go back to that very first Sezzle post that Charlie ever made, where he and the Sezzle team were doing a partnership for a webinar that they were going to be ending up doing on the Sezzle website. All right, so when we click in, we see that there's not a lot here. Maybe if we click on this. Okay, wow, yeah, so there's definitely some hate here, but it doesn't really matter since it seems like these comments were made 4 years after this post was made, which means Charlie wouldn't have seen them until much, much later. Additionally, there's no way we can know who made these comments and why they made them, unless... Nah, I'm just kidding. It's almost certainly just an angered customer. But not only this, but Charlie was also posting on the platform Twitter, the social media that is known for hating on everyone constantly. And not only was he posting a lot, but he was also posting his political takes on the platform, which honestly I feel is a bad strategy if you know that your company is about to put up some really bad earnings, or honestly even earnings that the market doesn't expect. So why would you expose yourself to this possible hate? But we have to back this theory up with evidence, so we have to go all the way back once again. And after going through all of these posts, I finally found it. Charlie posts about Elon Musk's integrity in Tesla shares, and within this very post, we see this post here. Hey Charlie, why don't you put a little more focus on your own company, #Sezzle. You have so many burnt shareholders, it's not funny. I wouldn't say hateful, but it's certainly spiteful. I'd give it maybe a 30 out of 100 on the Twitter hate scale. Okay, so we know this has happened before, so can we find any more evidence that this has happened again? And finally, we find this repost. We see that there's a customer complaint followed by another customer complaint right underneath, and then Again, the same guy as before, still asking him questions about the company. Still waiting for the listing, Charlie. You screwed your shareholders and continuing to do so, but apparently all is good for you and your board. Haven't we been through enough? At Charlie Youakim. And we see that when Charlie Youakim posted about jelly beans on X, a user by the name of Sezzle T12 asked, why is it getting T12 right after listing? A T12 is a stock halt for any that do not know. This means that the shares on the market are actually paused due to unexpected volatility, and more signal that Charlie is getting hate on the platform, except for this one comment, which is truly the only positive comment that I could find on here. And this is when we see this 2-year hiatus. So yes, there is evidence that Charlie was tired of the hate and just did not want to deal with it anymore. Or, it could be like 1,000 other reasons why you would stop using social media. But surely we should use the idea that affirms my theory, right? But I do believe that there is a way that we can profit from this, like I said at the beginning of the video. Because when I first found this account, I believe that it showed confidence that Charlie had in his company. And shortly after he started posting, his company did end up rallying 170%. But if we look at some of the other trends that have occurred during the time Charlie has started posting, we see that they've really started crushing earnings. And yes, they had been crushing earnings long before this, but a lot of the strong earnings potential has been coming from these latest quarters. And also, when you look at these further back quarters, you see these triple-digit earnings surprises. A surprise is just how much the company is able to beat the estimate of their earnings by. So, for example, the estimate of Wall Street was that Sezzle was going to earn 14 cents per share Q2 of 2024. When they actually report 36 cents per share, then it's a beat of 159%. The problem with this is 14 is a lot closer to zero than, let's say, $1.20, meaning that it's really easy to get massive beats that make the earnings look stronger than they actually are. So these may actually be stronger signals than these earnings are. But there is one big problem with this entire theory that I've discovered recently. Ever since the stock has had this run up, the stock is valued a lot higher, obviously, but this also means that the company could end up being overvalued. If we take a look at the price to earnings today, we see that it's a lot higher than it used to be. It's a 41 instead of that prior 17. And I don't think we have to do the math to know that 41 is higher than 30. Because Sezzle had such a low valuation down here, there was not a lot of pressure on the company to perform well. But now that the company is trading at such a high price, there's a lot of pressure for the company to show some very strong earnings. So when we actually go to check Charlie's X account, we see that he took a 3-week hiatus from June 29th to July 19th. And most recently, he's actually stopped posting for a couple of days. Now, this doesn't really mean anything in and of itself, but I do have another crazy speculative theory about what this could mean. We do understand that Sezzle has to have an extremely strong earnings beat for it to be able to continue to go up as it has been. So the question becomes, is Sezzle going to be able to have this extremely strong earnings beat? So as Sezzle consolidates their earnings for the August 6th reporting date, Charlie has to decide whether Sezzle's earnings are strong enough or not. Because if they're not strong enough, Sezzle is not going to outperform. It's not going to do better than what the market thought. And the stock is not going to go like this. It's going to go down. If the market doesn't like the earnings, then the stock is going to go down. That's just how it works. So Charlie might have been looking at the consolidation of the earnings, deciding whether if the company is actually going to outperform or not, and then deciding that no, he doesn't think that company is going to outperform. And during this consolidation, it wasn't clear whether the company is going to outperform or not, because we do really need to see a strong outperformance for this price to earnings ratio to be rationalized. So if you're thinking about the short-term stock movements of the company, then this could be a problem. But I do have good news for you. If you subscribe, then you won't miss the next video in which I actually talk about the long-term benefits of the company Sezzle. I'm going to be talking about how they really do have the best business model in buy now, pay later, and honestly, one of the best business models that I've ever studied in a small company. It really is an amazing opportunity, and I hope that you do subscribe to see the video into the future. And if I've already made it, click on it right here.